Hello, my name is Stefan van Woenzel and I am the author of Oil Traders' Words. I wrote a book which is called this Oil Traders' Words, and of course I need to show you it is this book. It's a nice book. It contains about 2,500 definitions that is daily used in the oil business. It's words used by oil traders, by logistic people, refinery people, by everybody in the market which is basically connected to the commercial side of the business. And it's such a common language, so we just use it. We use all the words, and sometimes we forget to ask ourselves, but what does it mean? What are those words? And one of the famous words, of course, is contango and backwardation. Well, contango backwardation, just let me explain in a very simple way. Contango business. Contango is basically meaning that there's a very weak market. The prices at the front is very low, and the prices further out in time are higher. So from month to month you get still high prices, and you get a curve which goes upwards. People call it the curve, the structure. The structure is in contango. It's a weak market. Prices are low in the very start. There's oversupply. And what do people in such a market? They just store all the oil they have. And that's smart because you can buy it at this price and then you can hedge it with a couple of months later and just cash in your paper money when you are starting to sell out the physical. So then it doesn't matter if you lose maybe a bit on the physical, you just make an additional on the paper. In case the prices in the future will go down instead. Well, that is not a problem. That's why you hedged it. The other way is the backwardation. The backwardation means that it's a very strong market. High prices in the start and lower out in time. It means that if you have oil, you want to sell it now. Because if you want to wait, it's going to be lower. Of course, it's all paper business. But why would you take the risk? So, backwardation, strong market in the front. Contango, weak market in the front. What does it mean for storage? Contango, you fill up your tanks, and it means that the storage companies are very happy and the prices will go up if you want to rent a tank. Backwardation, you want to empty your tanks and the storage companies are getting empty. It's getting boring and the prices are going down. In the contango market, it's easy making money because time is on your side. In backwardation, you have to be fast and you have to show that you're a good trader because then money doesn't come automatically. You cannot hide, you have to show that you're quality, that you can buy low prices, that you can do something with it, that maybe you can make a big blending value or you find the market, or maybe you can benefit from the tight market, but premiums, differentials on top of normal prices are going your way. So that is a bit the trick. What does it mean for refineries? It does mean that they, in both situations, are getting completely nuts from the traders. Why? Because in a contango market, you want to have more storage. So it means that the trader is going to load from the refinery as late as possible. It's always a bit hectic because the refinery is seeing only problems by running full and having no space for further production. But that is the trick, and there is always obligation from the trading and operation side to keep the flow going. In a backwardated market, it is the other way around. The storage is completely empty. Basically, refiners, the traders and logistic people are selling the oil actually before it is produced. It's not there. And there is always speed, always no time. I mean, you want to load it as fast as possible. Try to avoid to have it one day too long. Because one day in crude oil, for example, can cost only 2 cents a barrel. Just time. Time is money. So this is a bit about the contango and the backwardation. And of course there's more in my book about it, in a book called Oil Traders' Words. I would recommend you to buy a copy on Amazon.com or any other online bookshop. It's available all over the world. In Russia, it's available in Singapore, Australia, Germany, France, America, of course, Barnes and Nobles, Waterstones. But just order a book and I'm sure you're going to be happy. It contains 2,500 words definitions explained. It contains trading phrases with a lot of humor. It contains calculation tables. And the price is only $26.50 for a book, which is less than a barrel of oil. Just imagine, you can avoid one mistake by the use of this book because you understand a word better and meaning better. Then you already have regained the cost of a book. So there's no risk. So hey, if you're a youngster, if you're new in the business, go to Amazon.com, find the book, Oil Traders Words, get one, and I can really recommend it, and many people already bought one. So good luck, take a good decision, and I wish you a very nice day. Thank you very much, and goodbye.